Hello, it's Rhonda Thomas, and we're about to do financial accounting, chapter 4 coursework. Okay, so let me share my screen. All right, chapter 4 coursework. I have the Cengage problem open, and I'm now going into it. I have my spreadsheet open. We're ready to go. Chapter 4 has three main topics: the 10 steps of the accounting cycle. Okay, and we went over those in the intro video. We had to learn the end of period spreadsheet, which is what we're just about to go over again. And then that's step number 5. We had to learn the financial statement creation, which is step 8. And then step 9 is the closing entries. We had to learn the closing process so that all the revenues and expenses and the dividend account is empty to zero. And then we had to learn the post-closing trial balance. So we're going to go with step 5. So this first problem we have works with this end of period spreadsheet. So this is France Consulting. The following end of period spreadsheet was prepared for the year ending July 31st. So we do want to make note of that. Okay, August 31st. So period year end August 31st. Okay, that's what this period is all about. So what we have here is an unadjusted trial balance, the debits and the credits. Then we have debits and credits for the adjustments that have happened. And then we have the adjusted trial balance. So you can see each account that was affected by these adjustments. Okay, if it changed from these two to these two, and now we're ready to prepare the financial statements. Okay, the financial statement. So I have a little replicate of an income statement here. We're going to do the income statement, the balance sheet. I'm sorry, the income statement, the statement of stockholders' equity, and the balance sheet. Okay, so we are going to walk through all of these. All right, and then here's an example of the financial statements that we can look at if we need to, right? So we know how they go. Here is an example of the period year-end spreadsheet. Okay, and let me see if this is the same one. No, this is a different one. So, but that's what it looks like. All right, so we're going to push this together. All right, and I may have to rename a couple of things. So that's okay. All right, from here, let's just remember, these are the balance sheet accounts from cash to basically dividends, and then we have fees earned to expenses. All right, so the first idea that, or the first financial statement that they're going to have us do, let me push some of this down so we can have a little bit of extra room here inserted. Okay, so we're going to have to do an income statement, and then we're going to have to do a statement of stockholders' equity, and then the balance sheet. So what we need to do is remember that here is our fees earned. So let me put the fees earned into my little spreadsheet here, because this spreadsheet doesn't add it for us, and neither does this. All right, so first thing we're going to put in is fees earned. Then we have 4 expenses: salary, supplies, depreciation, and miscellaneous. So we want to be sure to put these in. Once again, this is creating the income statement that tells you whether you have a net income or a net loss. Okay, so I have 54,900 $69.40. All right, and then salary expense, $14,960. Supplies expense is $1,770. Depreciation expense is $1,050, and miscellaneous is $1,590. Then we need a total expenses amount. So let me key this in here. Looks like we have total expenses of, and if you want to do a spreadsheet or whatever, I think it would be helpful to have these. And then once again, if you have something to work with, and if you make a mistake, like this spreadsheet, if you work it like the spreadsheet, then you'll have something to go back to if you have an error. Okay, and so here's what we have for our total expenses on this. This is these four, so you'll need to add up yours because mine is different because of it being an algorithm. Okay, and then it looks like we have net income because we have more fees earned than we have total expenses. Okay, so net income of $35,570. Let's check our work before we move on. Okay, well, it looks right. Okay, it looks right. Now we're going to put together statement of stockholders' equity. Okay, statement of stockholders' equity. So let me see if I've got one here to use. Okay, hang on. Let me go get one from the intro. I think I have it here. We got lots to look at. So, all right, looks like I'm going to need to create one. No problem. Just takes a second here. So here's our income statement total. Now we're going to do statement of stockholders' equity. So I'll put income statement here. I know we have a statement of stockholders' equity, but I want columns to be able to add it up. All right, so let's have common stock. You can abbreviate retained earnings and total. Okay, so this is the statement of stockholders' equity. All right, so if we go and look, based on the preceding spreadsheet, so we have to look at what common stock was, okay, retained earnings, and then we also need to watch if there's any more information. Yes. So there was additional common stock issued on the last day of the month. So what you see sitting here in common stock, I've got $6,700. That includes this additional amount. So we're going to have to back out that amount to get the beginning balance of common stock. This is the beginning balance of retained earnings. Okay, so this is how you know the difference. What you see, one more time, what you see on the spreadsheet is common stock for the year end. What you see on the spreadsheet for retained earnings is actually the beginning retained earnings. All right, so our beginning retained earnings. Okay, so let me put this in here too. All right, is $13,570. All right, common stock. Here's how I'm going to do the. I'm going to find it. So we're going to have the year end. This is August 31st. And then the beginning If the year end is August 31st, and the beginning was September, I'm going to put beginning September 1st. Okay. So common stocks have 6,700, but the additional amount of common stock came in and they said that it was 2,600. So we're going to have to back out. So here is the balance, and you subtract the additional. So 4,100. All right, 4,100 is going to be the beginning balance, and then the ending balance. Okay, one more time. So 700 is the ending balance. Retained earnings has 13,570. You'll need to put your numbers in. Okay, and then we did additional amount of common stock of 2,600. And so the beginning balance was 4,100. Now we'll want to add across here to get a total. Okay, so once again, this is why I do a spreadsheet. We want to add these two together, and there is our total of equity at the beginning of the year. Okay, and then we want to add this to the total here. Now we're going to do net income. We just found net income, 35,570. We'll put that in. Okay, and that goes in the retained earnings column. So okay, so we'll do net income. Our net income is 19,370 is what I have. 19,370. 600 here, and now we're ready for dividends. Dividends. Get the dividend amount from the spreadsheet. So up here, dividends are 25.80, and they get subtracted. Okay. So then they get subtracted for the total as well. And now we're going to add down. Okay, so add down. I got 30,360. If I add down here as well, I got 30,060. $37,060. Okay, so let's just put this in. And then the dividend. You're going in with a negative amount. Seems like that's the way each of these problems want it to be. Okay, and then having a spreadsheet provides the math for me. All right, let's see if we're right. Hopefully. Uh-oh, something's wrong. All right, so hang on. And this is where a spreadsheet comes in handy. All right, so up here, 19,370. Oh, I'm sorry, I looked at the wrong number. Okay, so it should be 35,570. Okay, I looked at total expenses. My fault. Okay, so now let me put that in. You're going to see how quickly this gets fixed because I already had something there. Okay, and we want to add across here. I'm just going to drag down. Okay, there we have it. That's better. Okay, so then this becomes retained earnings 46,560, and then total equity. Total equity 53,260. Now let's see if we're on track. Much better. Sorry about that. Well, you get to see me make mistakes. So it happens to the best of us. And once again, if you have notation of what you're doing, it can help a lot. Okay, now let's do the balance sheet. I like to do the balance sheet right after I do the stockholders' equity with those numbers. So we've got common stock and retained earnings. The common stock is 6,700. Retained earnings is this balance right here, 46,560. Total stockholders' equity will equal what we found right there. So we already know the math there. Let's go get our liabilities. Okay, liabilities are up here, accounts payable and salaries payable. Put those amounts in. Okay, so let's see here. We've got 5360 and 260. 5360 and 260. We add those together. Okay, so let's do the balance sheet now. We did the income statement. We did the statement of stockholders' equity. Now let's do the balance sheet. We got assets, liabilities. Now I'm not gonna put them in exactly the way it is. The stockholders' equity. And then a total. Okay. Remember, both sides of the balance sheet must balance. So we've got common stock. Right. So let me just put this in 6,700. And I'm not going to put in our titles right now. I'm trying to hurry just a little bit. I guess I can abbreviate. That's fine. Okay, so this is common stock, retained earnings, total equity. Okay. Total equity, 3,260, right? And then we're going to have total liabilities and stockholders' equity. Got to put our liabilities in. Go to current, long term. For current, just go to AP. Salaries payable. AP wins. Total for those. 56. 20. Okay, now we can add down to find out what our total balance on one side of the balance sheet. Yep. Okay, 5880. If we're right, then that's what that will be. All right, so let's see here. 5880. Let's check our work before we go any further. Whoops, one more zero. Now let's see, 880. Just about got it wrong. Okay, so we're good. So that means that this half of the balance sheet also is total. Let's start with cash, accounts receivable, and supplies. You'll want to get used to this order because when you do a balance sheet, that is what it will be. Okay. And then we have property, plant, and equipment. We have land, which has no accumulated depreciation. We have a building and its accumulated depreciation. And then we have book value of the building. Okay, so Let's put our cash amount here. Cash amount is $83.50. Okay, our accounts receivable did not get adjusted. It's $19,870. And our supplies are now $340. So $340. Oops. So let me put these in here. This should be total assets. Oops. Nope. Total assets. And might need a little more room here, so I'm going to scoot down just a little bit. All right, so we've got cash. These are $350. Accounts receivable is $870. Please remember to use your numbers and supplies. And add those together, get our total current. $28,560. You can back into how much property, plant, and equipment is if you want, but I'll go straight forward here. All right, let's go to land. All right, land has 17,290. Okay, the building is 16,290. And then its accumulated depreciation, it goes in as a negative, but we'll find out. Okay, yeah. Okay, so then accumulated depreciation's new adjusted balance is $32.60. Okay, so I'm going to need that too. So here's land. Here is land. 1990. Total current asset. There's land. We've got the building and accumulated depreciation. We'll put that right here. And then we'll put accumulated 3260. I believe is what I said. 3260. All right. So then we want the book value. Book value. Get used to putting that in there. We don't have a book value for land because we don't know how long land is going to last. So we don't have accumulated depreciation. So there's the book value of the building. Okay, so I'm going to put 3260, the book value of the building. And then the total property, plant, and equipment. Okay, and that insert. So then total PPE. Total PPE. I'm going to add these two together. Our total cost. All right. Plus our total PPE. and a total asset. So we're going to see if that equals this total right here that we've already put in. If so, then we should be good. So let's add these together. Good. All right, so we did where we wanted to be. All right, let's put total property, plant, and equipment in, and there. So we worked our way kind of backwards into that balance sheet, and there's nothing wrong with that. Okay, so there you have it. Please be sure to use your numbers so that you get the answers that you need. Okay, this next one is an income statement, but it is with a loss. Okay, so I don't know if we've done a loss before. So let's see what we can do with this, right? So when you're given, look, you're given these by, this is in alphabetical order. So this is not in financial statement order, it's in alphabetical order. You go look and see what goes at the top of an income statement. It's always revenues. Okay, so fees earned, or I'm sorry, service revenue is what they're calling there. And it's usually the biggest number. Sometimes helps focus on. And then we have expenses, and we want to put the expenses in descending order. Okay, so let me now go down to my little one here. And we will go 366, 700. Oops, 366, 700. There we go. All right, and now we're going to put our wages. Usually wages is usually the biggest. Sometimes not. We want to be sure to put wages expense, not wages payable. Okay, so we want 288, 400. We have rent expense of 77,200. We want utilities expense. So you're going to get lots of practice putting together financial statements because that's the main focus of why we do financial accounting. Okay, so practicing putting them together is the best thing to do to learn it. Okay, so 19,100. All right, and then we have insurance expense. Okay, insurance expense. Next, we have supplies expense. And then we have miscellaneous as well. All right, now we're going to need to put in an amount for total expenses. So now let me key these over here and let Excel do some of my work. Okay. So, like I said, we have not worked one that in total expenses. I'm going to put this in as a negative. No, I'm not. No, I'm not. Okay, and then this is going to be a negative number here, 68,800. This is a net loss, and I just kind of wanted to show you what it would look like, and this should be supplies expense. Okay, and it is right to put this in as a positive number because we actually subtract it from up here. There's not as much in revenue as there is in expenses, so we're going to have a net loss. Yep. And remember, this net loss actually gets closed to retained earnings, and it'll actually affect retained earnings. It'll make it go down. Okay? A loss, just like net income makes retained earnings go up, a net loss causes retained earnings to go down. Okay. So, all right, I think we have another statement of stockholders' equity. Okay, so we've got the T accounts here. So we want to make sure that we can put in a statement of stockholders' equity here. And so I'm going to use my one that I created up above. Move it down here. What we want this right here. This for something to some numbers in. Okay, so we have common stock. A common stock is has a credit normal balance because it's an equity. Retained earnings have a credit normal balance because it's an equity. But then the dividends have a debit normal balance because they go against retained earnings. All right, so let's go ahead and put in our beginning date. Okay, so we've got our beginning date of January 1st. I'll go ahead and put that in. Okay, and then we want the ending. So this is going to be the calendar year. Okay, calendar year. So common stock starts with 80,000 as the beginning balance. Okay, so common stock begins with 80,000 as the beginning balance. Retained earnings is 4,150,800. Okay, so there's our total. It looks like there was some additional common stock issued in February. So we want to put that in. Okay, so let's go ahead and put 80,000, 4,150,800, and then 4,230,000. And then the additional common stock issued listed. Okay, and then let's look here. Retained earnings, right? There is a credit of 700. That is net income. Net income. So 700,000 goes in there, and then dividends. Well, there are 4 entries here. Dividends in total, we paid out 120,000. So we want to put that in. All right. So I think we have net income. You can watch it in the balance. You can watch it in the ledger take place, what happened also. Okay, so we have 0 here and 0 here. Comes down to 100,000. And I've got to put in some here. There we go. Okay, there we go. So, and then 100,000 for net income and 120,000 for dividends. Practice, practice, practice. And then 4,730,800 and total equity 4,830,800. So this was to show you the T accounts and how each of these play into this financial statement of stockholders' equity. Yep. Okay, so then I think the last one here is a balance sheet. Nope, closing entries. Okay, so this is 415, not 4. I guess I didn't put 412 in here. All right, so we will get rid of that. And then we're going to look at the closing process. Remember, the closing process means that you are simply zeroing. To close something doesn't mean you're not going to be able to use it again. It just means that close in accounting means to zero the temporary accounts. Remember, the temporary accounts are revenues, expenses, and the dividend account. So here is that process again. Here, retained earnings is your permanent account. We've got our revenue accounts, we've got our expense accounts, we have our dividend account. However many revenue accounts, we're going to put a debit in them to close them out. And then this will now have zero, but the offsetting credit goes in here. And all of our expense accounts, they have to be closed with a credit to the expense account and a debit to the retained earnings. Okay, and then finally, the last one will be the dividend. So here we go. Let's go ahead and put this in so we can see. So if you'll draw 1, 2, 3, 4, 5, 6, 7, 7 T accounts. This will be helpful. It's always good to put your T accounts down before you start your closing entries. So we have 2,320,000 in fees earned. Okay, dividends have 120,000 in it, and the green represents the beginning balance. Okay, beginning balance, and then our rent expense 260,000 at the beginning. Retained earnings has 5,850,000. Okay, so don't pay any attention to these numbers because we're not ready to make the entry yet. Supplies expense has $31,010 in it. Wages expense has 1 million. Wow, 1,500,000 in it. Not 15 million. Okay. And then finally, miscellaneous has 14,990. Okay, so here we are, just like they were in T accounts. So how do you zero these earnings? You put a debit in, right? A debit of 2,320,000, and its offsetting credit will go in here, and I'm going to put this as close revenues. Close revenues. And this is going to be closed expenses. So we're going to put it in for each of these, okay? So I'm going to need a little more room here. Okay. So close the revenue. We debited and we'll credit exactly the amount that we did here. All right. Now we're going to close all these expenses. Okay, and then let's go ahead and put in fees earned and put the debit that we go to fees earned here. Okay, and we will hang on to this. This isn't going to be closing the revenue. We'll get a net income here in just a minute. But okay, so fees earned get 2,320,000. Okay. Then we're going to just start listing our expenses. Wages expense, rent expense, supplies expense, miscellaneous expense, and then the last credit will be retained earnings if our expenses are less than our revenues. Okay, so let's go through this. So yes, we put this in, but we're going to move this down here below because we're not going to put an entry in retained earnings for the offsetting to offset the revenue. This is going to be for net income right here. Net income. I'm going to put it down. So we want wages. We want a credit to rent expense. We want our supplies expense credit. Because like I said, we're trying to make all of these have zero. Okay. Now we're going to be looking for the amount that makes this entry balance. Okay, so if you need help with how to do that, let me help. Okay, so let's put our closing entry here. So then we'll have just going to put numbers in it. And this is going to be help us figure out how much basically net income is. Okay, so over here to the side, I'm going to add these up. I'm going to add up the expenses just so I know what it is. Okay, there it is. So yes, we are going to have revenue, fees earned, wages, rent, buy, slave. So I did a little total here on the side, so we know what that is. This is called a plug number. Plug number. We're going to plug in what it's going to take to make this balance. And that's going to be a credit to retained earnings. Okay. I had to see if we had a net income or a net loss in order to make this happen. So our retained earnings is going to get a plug number as a credit. And the difference is this minus this, well, all of these, right? So I'm going to subtract the total, and it looks like our plug number is 514,000. Okay, this is net income. Yep, net income. So this is how the credit to retained earnings gets put in here. And one more time, this is a plug number. You had to put everything else in before you found it. Okay, so let's see if we're right. It must balance or it won't process. Okay? And then the other one is simply to get rid of whatever is in dividend. So there's 120,000 in dividend. And when we put this one in, we will put this in for the dividends also. So, let me put this over. This was all of the expenses, right? So if you put in all the expenses here, okay, and then no, sorry. No, all of these credits have gone in up here. There's a credit here. Sorry, I've not done this well. Hang on just a minute. Don't fill it in. All right, so all right, every credit that we put in an expense account. We've got this one. We've got this one, and this one. All those credits went in, and then the offset went into retained earnings of net income. 514. Okay, now we're going to get rid of the dividend. Okay, that is the 120 and the 120. And now we should have a new balance here in retained earnings of the beginning plus the net income and subtract the amount of the dividend. And there is what I have. They didn't ask for the new balance in retained earnings, but notice it's a different balance than what we started with. Okay, and that's why you can't use that balance from the end of period spreadsheet, because it's just representing the beginning balance, and you will never balance if you don't run it through net additional common stock, net income, and dividends coming out. So here is the amount that we would, if they asked us what the new retained earnings balance is. Okay, here's that entry to close dividends. Okay, and you close it to retained earnings. So I picked the wrong one. There it is. Okay, so this just helps you remember what the closing entries are. I still say it's best to put them in T accounts so you can see what you're working with. All right, and then we figured out what that is going to be. Okay, let's go ahead and get this blank sheet done, and then I'm going to stop the video and do a completely a complete video on its own of the 4.4a. Okay, so follow along with me for 4.1a, and then you'll have an algorithm to do, and then in the other video we'll do 4.4a, and then you'll have yours to do. Okay, so I have a sheet to go with, to read from, and let me see what I have on here. I don't remember what I have on here. Oh, let's get rid of that. Right. We're ready for problem 1A. And this is taking the numbers from an end period spreadsheet, making the financial statements, closing, and then doing a post-closing trial balance. Okay, so move these down. Okay, so here is our adjusted trial balance, adjusted trial balance. So basically what we need to do is, let me refresh this if it makes it better. Start with the income statement and I stack it. Okay, so then I'm going to go up here and borrow my I'm going to borrow these because you still need a place to put the calculations in. Here we go. Put this in. We'll make it work. Still gotta have a place for your calculation. Okay. So we're looking at the year end January 3rd, January 31st. Okay, so we want to make sure that we do that. Okay, so once again, the adjusted trial balance is your step 8. No, step 7. Adjusted trial balance is step 7. Financial statements are step 8. Closing entries, step 9. Post-closing trial balance is the last trial balance you do in the accounting cycle. Okay, and steps 9 and 10, which are the closing and the new post closing trial balance, those are done to prepare for the next period of time that we're going to be looking at. Okay, so the first thing I want to do is make this a little bit bigger. If we can see it better. I'm going to read I'm going to read so we don't have to scroll up and down so much. I'm going to put in, it'd be nice if I had a copy of it and bring it over here. I guess I could. Hang on a minute. I could do this spreadsheet. Just a minute. Let's try something. I'm going to make this kind of small. See how small I can make it. Get it all on the screen. Okay. Here's what I'm going to do. I'm going to copy this with my snip and put it in my spreadsheet. Nice. I'll tell you, snip is a very valuable tool. Okay, I'm going to put that over here so I can see it. Okay, and be able to put things in without scrolling up and down. So there you have it. All right. So let's see. These are the two columns we want to pay the most attention to because they've already done the work here. They've already figured out what the adjustments are. All right. So that way, just compare an income statement. Now, here's one piece that we are going to have to remember when we do the stockholders' equity statement, that they had an additional common stock of 25,000. So we'll come back to that. Okay, so now let me make this a little bigger, and I'm going to get rid of the instruction. All right, so here we go. First one's going to be income statement. Income statement is going to be for the year ending January 31st. Okay, income statement has a label of revenues. So revenues and expenses. So let's put those in. We'll put our labels in first. And you can type it in if you want. Okay. And it looks like over here, we've got fees earned and rent revenue. So let's put those in. Fees earned, rent revenue. Okay. I can put the amount in. I want to make sure that I'm over here. 740,500. Okay, and 740,500. Now remember, this one we are doing the same numbers. We are doing the same numbers. So, all right, we have two revenues. I need to make room for another revenue. Have 40,500. Our rent revenue then is 9,500. So then we're going to have a total for that. And that's going to be total revenue. Okay, so we have 95 revenues. There we go. 9,500. And if we look at the math, we're looking at the total revenue. We have expenses. And we want to put the expenses in So we have salaries and wages expense, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so we've got 9 expenses, so I'm gonna have to make more room here. And then we can put in what it's telling us. So the first one is salaries and wages expense. I'm going to go ahead and put my expense label in first. Advertising. Salaries expense. Depreciation expense building. I'm going to borrow that from up here. Depreciation expense building. You've done me a favor here. They've given me the ones to put in the order that they need to be put in. Repairs expense. Expense equipment. You'd like to put your windows beside each other, of course. I understand. Okay, the next one is insurance expense, supplies expense. I hate putting your labels in first. It tends to help you not make as many errors. But okay, so miscellaneous. And then we're going to have total expenses. And then we're going to anticipate net income. And we'll see what we get. Might have to change it if it's not right. All right, we're going to put in our salaries. We want to make sure to look at the numbers over here. Okay, so 424. This is not the right one. That's depreciation expense. That's why I would have gotten that wrong. So depreciation expense equipment. I picked the wrong one. There we go. Okay. 8,000. Insurance expense, 3150, 2180. Miscellaneous is 1,200. Now we need a total. Okay, so here's where I have to put in these expenses here. All right. So I can get a total. That's the total. I'll check. We got 600,400. So yes, we will have a net income of 140,100. Uh-oh. Nope. Hold on. Let me see. Ah. Uh-huh. So I have to go back and get the right one. So we want the total revenue minus total expenses. There we go. 149,000. Okay. There we do. There we go. Now we're going to need to remember that number. Okay, so we're going to make this green. So we'll remember it. get rid of a couple of lines here. All right. So we're going to need to remember this for our statement of stockholders' equity. So let's go ahead and highlight it. I'm going to get rid of the income statement. Now remember, we're going to have to remember those instructions when it comes to putting together the statement of stockholders' equity, that there was an additional common stock issued of 25,000. So we're going to need that. We're going to have to remember that. Okay, in fact, let's just go ahead and put in, all right, so we got our beginning balance of February 1st. Balance February 1st, because our last day of our fiscal year is January 31st. Okay, so I'm going to make the instructions go away, and we want balances as of. We want that to be our first balance, February 1st. And then we want balances as of January 31st. Yes. Okay, and then let's think about this now. Common stock. Remember, this is the ending balance, so it goes down to here. So retained earnings goes up here. Retained earnings is 137,100. Okay, we had an additional amount of common stock. It was 25,000. So how much does that leave for common stock fee before the extra 25? So let's put issued common stock there. Okay, so that means our beginning balance would have been 50,000. And then, so let's put this in here. All right, for retained earnings, it adds across. So here's what our equity was at the beginning of the year, which was February 1st. Issued common stock does not affect retained earnings, but we need to put in our net income. Net income, just found it right there. All right, and then our dividends are 10,000. And so that goes in here. All right, so let's see what we got now. So we have net income. Net of 149,600. And dividends. Zeros don't stay. I think we have to put this in as a negative. We're adding down, right? So 276,700. My spreadsheet is saying. So here are the totals at the end of the year. And those are the numbers we're going to use for our balance sheet. Okay, so all together, if I have it in there right, here we have it. Uh-oh, I'm missing something. Just a little something. 0, 0. Yes. The label. Sorry about that. The label. Yep, it's going to be the same label as the income statement for the year ending. So just about, I should have put that in first. Sorry about that. We'll put our balance sheet one in. Okay, so now let's go take care of the balance sheet. We're going to have to refer to these numbers for the balance sheet. And I am going to move this down so I can see it. And don't want to use unadjusted because that won't work. Okay. So go get the balance sheet. And I'll leave that one there too. All right, here comes the balance sheet. Let's stop by and get this number right here. That's going to be the balance sheet statement. So it's going to need that at the top. Okay, let's start at the bottom. Let's start with common stock. Okay, we know. So now let me put my information in. Okay, common stock. And we have to squeeze this over. Okay, common stock has 75,000 in it. Clean earnings is 137,000. Now we don't want 137,000. We want it from here, 276,700. So we want total equity to be 351,700, just like that. So we're going to put that information in. Okay, now let's go get our, we have 3 new liabilities. We have accounts payable, salary and wages payable, and unearned revenue, or unearned rent. Okay, unearned rent is $8,100. There we have it. Let's go ahead and put these in. On top. Let's put in retained earnings from, yeah, here, not beginning, or you will not balance. You will not balance, you will not balance. Total stockholders' equity. Now we're going to put in our current liabilities. It's going to be accounts payable. Accounts payable. Want salaries and wages payable. Unearned rent. And total current liabilities. They don't have any long term. Total liabilities. Even though it started with current, they don't have any long term. So we want to see those here. Now we can add down, right? We can now add down to what this says. We want to make sure, yep. So it should be 375,500. You want to go get the total liabilities and stockholders' equity label, put it in. And we seems like we build the bottom first. All right, so this is going to be total assets here. And if we've got this right, which I have not checked, let's go ahead and check it. Okay. Since it's not quite right, let me see what it is. 23. That's off. Come on. Here it is. Here it is. 40. Yeah, this is not right. 42,800. There we go. So 394,500. That was wrong. 394,500. That makes this 394,500. Okay, now I think we're okay. Yeah. Okay. So now we're gonna go look at assets. Okay, we've got cash. We've got current assets. Let's go ahead and put current assets in. And then we want property, plant, and equipment. Property, plant, and PPE is what they call that. Cash is always first. Accounts receivable. Okay, let's see what we have. Prepaid insurance. So I'm going to have to put a few more in here. We just adjust this. So accounts receivable, and then prepaid insurance. Okay. So cash, 11,600. So I want to make sure that I'm following over here. Yeah. 43,900. Prepaid insurance, 16,050. Supplies. Okay. Well, I can bring that one back up. Supplies, remember, is just like a prepaid, anything prepaid. Supplies is $550. And so now let's see. Cash, accounts receivable, prepaid insurance, and supplies. Yes. Our land is 90. Our land is 98,000. Okay. Land is 98,000. Nope. No, give us a minute. Building and equipment. We're gonna need a little more room here. So our building, 400,000. Now continuing depreciation is 230,300 over here. Be careful. 230,300. Okay, so that makes the book value of that building. And this is going to be the 147,000. Then we got to look at 93,100. 93,100. Okay. And we'll go see who's got it. Let's go ahead and put accounts beforehand and put our accounts in. Okay, we want accounts receivable. Prepaid insurance. Five. Total current assets. Let's go ahead and put these in. 1,600. 3,900. 15,850. 550. So our total current asset is 72,900. Now the first one's going to be land. It doesn't have an accumulated depreciation, but the building does. then the equipment goes. I'm gonna put that in. You are workbook. Let's go get the accumulated depreciation for the building. The accumulated depreciation for the equipment. And then so they've got each of those separated, so you know which one's which. Okay, so let's go get the book value for the building. For the equipment. Okay, so let's see here. I got it. Here's 400,000. And then negative 230,300. Now, if you accidentally put the wrong amount in the wrong accumulated depreciation, you're going to find that the equipment is actually more than, I'm sorry, accumulated depreciation here is actually more than the equipment. And that's not possible. Okay, you can't depreciate something more than its original amount we paid for it. Okay, so it looks like it was 53,900. 169,700. And then we want total property, plant, and equipment. Sorry, my dog is snoring. I'd like to be myself. Okay, total property, plant, and equipment. Let's put this in. The last piece. And then we're going to put in 321,600. Comes from these three here. Okay, let's see if we got it. I think we did. 198 out of 198. Okay. Now what we're going to do is we need to get ready for a journal entry. Okay, for closing. So I am going to get rid of the balance sheet. We'll have a journal here. And we're going to close. Close. Right. So we really need T accounts. So let me get those for us put together, and then we'll come back. So Okay. So I went ahead and we're getting ready to do these closing journal entries. And if you recall, let me show you the instructions again. Where I went ahead and so from fees earned, rent revenue, all the way down, we paid attention to, hopefully. So let's just look at it real quick. I've got 740,500 as a credit. In fees earned, I've got 9,500 in rent revenue. I got 424,000 in salaries and wages expense, 75,000 in advertising. Utilities expense have 33,000, 500,000 or 25,000 in depreciation expense. The building repairs expense has 18,870. Depreciation expense equipment is 8,000. Insurance expense 3,150. Supplies expense 2,180, and miscellaneous is 11,200. Dividends are $10,000. So dividends are 10,000. Retained earnings has 137,100. So there it is. Okay, now what we want to do, the first step, the closing process is, and you can see what those steps are. We're going to put a debit in all of the revenue accounts to make that revenue go down. Okay, so here comes the closing entry, and it's going to be January 31st. January 31st, we want to earn for 740,500 rent revenue. We'll get to the debit of 9,500. Now, here comes all of the expense accounts. All of the expense accounts. Salary and wages expense. I'm going to get a credit of $424. So I'm going to make that happen on here too. On the credit, that's 5,000 for advertising expense, 33,000 for utilities expense. This one, 25,000 for depreciation expense for the building, 18,070, 8,000 for depreciation expense equipment, 31,50 for insurance expense, 2,180, and 11,200. So quite a few here. So let's go through these. For quite a few expense accounts. Luckily, these days, computer software will do this for us. So what I need to do is total up. All right, so let's go back up here and look at our income statement. This will help us, right? So the total of our expenses are $600,400. Total of our revenues are $750. Okay, so our net income. Net income, all you gotta do is go up and look, what is net income? Net income goes through retained earnings. Okay, so if you look at the income statement, it'll tell you what you need to do here. And now we balance. Let's put in the last one then. What this does is we're going to now close dividends. So we're going to credit dividends and we debit retained earnings for that amount. Okay, and then the retained earnings get to 129,600. Okay, so here we go. So the debit goes to retained earnings of 10,000 for the dividends, and then the dividends gets a credit to close the debit, give it a try. Okay. And now the very last thing is we're going to put together a post-closing trial balance. So, give us a little bit more room here. We'll come up with that. So if we look at this here, right, if we look at this, all of these have zero balances now, and so does dividends. So we are going to look and see. Remember, our retained earnings is not that anymore. Okay, retained earnings actually, if you go back up to the statement of stockholders' equity, retained earnings will have 276,700. Let's remember that. Okay, it'll be worth putting down because, and we can prove it here, we can add these two together and subtract 276,700. You have to be sure to put that in for our balance sheet. All right, let's do, it's not a balance sheet, it's a post-closing trial balance. Sorry about that. So let's see if they put our, they've put our account in for us. That's nice. Let's go down to retained earnings right away. Let's put in the new balance. It's going to have to be there. And now we can just go down through these, and we have to pay attention to the adjusted column. So 11,600, 43,900, and this is the last trial balance of an accounting period before you start a new one. So this is the 10th step. Nope, that's 90. Cross the situation. Almost finished these problems here. So go ahead and put in our payable, our liabilities, right? So our post-closing trial balance is the shortest one because we don't have any about in our revenue accounts or our expense accounts or our dividend. We have it. So let me throw this in real quick. And I want to make sure to do both. we're gonna get totals down here. Right, right. Put it in. 717,900. If I missed something. Oop, yep, one too many zeros. Oop, there. There we go. Okay, yes. All right, that's it for this one. I have one more that we're gonna do for the 4A, right? And I have a spreadsheet. All right, so we're gonna stop share and say goodbye. All right, glad you've made it. We will keep going. See you on the next video.